As 2Q earnings season gets underway, can these names deliver? Our next guest raised his price target on both Door and Uber. Two names that our own Jim Cramer, by the way, says are the winners in a winner-take-all category. With us now is Nikhil Devnani. He's senior U.S. internet analyst at Bernstein. Nikhil, did we miss the run, or is there still a lot left to go here?
Well, first off, thank you for having me. Appreciate it. No, we think there's still more to go here. We're relatively constructive as we look at the setups into earnings coming up soon as we think about the balance of the year. I think ultimately, despite the fact that it's been a year of some pretty dizzying headlines, the U.S. consumer has held in relatively well, and consumers continue to engage with these mobility and delivery services at a pretty healthy clip. And ultimately, that growth is what's going to backstop these stocks. And if we continue to see that kind of momentum, stability, as we like to think about it, as for the balance of the year, we think there's still a relatively attractive setup for this sector going forward.
Okay, so what's propelling that? I mean, kind of in the broadest possible terms, without getting too tammy, you know what I mean? But like, what is propelling the performance here? And as we head into earnings season, what do people need to hear?
Well, look, I think first and foremost, we're learning that consumers really like convenience. They're willing to pay out for it in various forms. We're seeing that across these businesses, and that continues to be true. So it's incredible to see how much frequency of use continues to grow, and that's happening across different cohorts, across different markets. So I think these services are solving kind of a real problem for consumers. And I think over and above that, what we're learning is that these businesses are making healthy amounts of investment into new growth opportunities. So some of that is international, into new markets, some of that is new products. But when you couple those things together, that's ultimately where the incremental growth is coming from. And I think from a stock perspective, what's really important is that the market is finally coming around to this view that these are better businesses than we maybe gave credit for several years ago. So what's also happening is that earnings are inflecting, and inflecting quite considerably as you think about 25, 26, 27. We're still in this margin improvement mode. The market is acting more rationally. And that is also underlying these stocks right now, and where a lot of the thesis lies in this coverage.
I like what you said, that the fundamentals, the actual businesses are stronger than we thought they would be. And I'd love to hear more about that.
Yeah, look, I think these companies now serve, tens of millions of people, or hundreds of millions of people in Uber's case. And I think what's amazing about it is that frequency of use is really high. This is something that we use on a very consistent basis every month. So average frequency of use, if you look at a DoorDash or an Uber, is in the ballpark of 5 to 6 times a month. Increasingly larger and larger swaths of the audiences that they have are becoming subscribers to these platforms as well. So they're becoming highly recurring in nature and very habitual. And they're doing more and more and spending more and more with these platforms. So I think ultimately what we're seeing is that, again, convenience there is value for it in the market, and that's underpinning these companies.